I now yield myself 5 minutes. So first of all, I want to thank you all for being here. It's refreshing to have regulators in place that once again care about legitimate safety and soundness issues rather than advancing political agendas, so I appreciate that. I represent one of the most rural congressional districts. I have some very large counties that have less than 500 people in them. Actually, we have more cows than people in my district. And it's our community financial institutions that make sure that my constituents, particularly in cow country, have access to banking services. So I'm going to just go down the line on this one. This question's for each of you. So what is the biggest regulatory barrier you see facing rural financial institutions, and what is your agency doing to address it? And I'll start with Vice Chair Bowman.
Thank you. Being from a rural community very similar to yours, where we have more cattle and likely deer than people, I think it's very important, and having been a community banker in that community, the importance of right-sizing the regulatory burden is absolutely critical for smaller institutions to be able to continue to serve their communities.
Thank you. Mr. Gold?
I agree with that. I think it's the over-regulation and over-supervision. One of the things that was occurring at the OCC too frequently when I took over in mid-July, and what that had occurred over the last 4 years, was a situation in which we were not actually engaged in risk-based supervision, so we were subjecting smaller banks to prescriptive requirements coming out of DC, which made no sense based on their business model.
Thank you. Mr. Hopman?
I'm from a remote area as well. It was 26 miles to get to a McDonald's. So I hear you on that, and our local community institutions served an invaluable role that none of the big banks would. I would say BSA AML is the thing I hear over and over again. Every retiring executive who leaves it and says, what are you not gonna miss? They're gonna miss a lot of things by running credit union. The thing they're not gonna miss, you hear it over and over, BSA AML. They say it's not the time I spend on it, it's the time I waste on it. That's one area I think we could work together.
Thank you. Mr. Hill?
Yeah, I would echo all the comments from my colleagues. I'd say the two things that I hear most frequently from the smallest institutions are the cost of compliance and the cost of technology adoption. And we are taking a number of steps to try to make progress in those areas. On the compliance side, that includes things like reforms we're making to supervision. We recently just finalized a rule that would raise and index several dozen thresholds, almost all of which apply to community banks. Fully agree with the comments on BSA, AML, and we're heavily engaged with conversation with the Treasury Department and others on reforms to that process.
Thank you. Thank you all. Shifting gears here, the Financial Services Committee released a staff report yesterday on the Biden administration's efforts to debank digital assets. This question is for anyone who wants to answer, but what lessons is your agency taking from this report, and how are those lessons shaping the agency's broader approach to digital asset policy, including implementation of the Genius Act? Any takers? Mr. Gold?
I think one takeaway for me, at least, is that if the activity is legally permissible, which the Genius Act just made payment stablecoins legally permissible, as well as, for example, the custody of digital assets, that's legally permissible, I think it's really incumbent upon the supervisors, so us, the OCC, to work with the banks that want to engage in these legally permissible activities and ensure they can do so in a safe and sound manner. That is, not put all the burden on the banks to come up with how to do it in a safe and sound manner. That's what we saw over the last 4 years, and that was essentially the death knell for those activities that, again, were legally permissible and some banks wanted to engage in. But if the regulators won't work with them to find a path to do it in a safe and sound manner, there's no way they can do it.
All right. Thank you. Anyone else? Mr. Hopman?
I'll just add that under the prior administration, I've been at NCUA for 5 years. I was confirmed 5 years ago today. I'm proud that working with my Democratic chair at the time under the Biden administration, NCUA was the only regulator that I'm aware of that not only was not hostile to digital assets, that caused some of the debanking, but we put out positive guidance, 2 pieces, which is 2 more than anybody else put out during that time. And credit unions saw the other result of the debanking. They got an enormous amount of attention and deposit flow from digital assets firms. Why? Because they were afraid of being debanked by the banks, which is where they had their money. I just want to add that.
Thank you. Any follow-up? Well, my time has expired. I want to thank you all for your comments there.